What the heck just happened to E.L.F. Beauty? I mean, last night we got results from this low-cost cosmetics and skincare brand, and the stock got eviscerated today, down nearly 10%. You know we've long championed this one. It's been a great growth stock over the last few years, largely because it offers its customers quality merchandise at incredibly affordable prices. Unfortunately, it can charge low prices because it makes most of its goods in China, which means most of E.L.F.'s products are about to become more expensive. So last night, even though E.L.F. delivered a nice top and bottom line beat, management declined to issue a full-year forecast because they really have no idea how the tariff situation is ultimately going to play out. However, the limited guidance they gave did suggest that their margins are going to take a real hit. I got to find out more about this. Maybe that's why things got, well, just awry. Let's check in with Tarang Amin. He's the chairman and CEO of E.L.F. Beauty to get a better read of the situation. Mr. Amin, welcome back to Mad Money.
Well, thank you for having me.
Okay, so Tarang, this is one of the most confusing quarters because obviously you're in the crosshairs of China. At the same time, you keep opening new doors, you keep taking market share, but it is difficult to figure out how much you can make if the numbers can change. Why was that so difficult for investors to understand?
You know, we're a little perplexed because we just delivered our 26th consecutive quarter of net sales and market share gains. In fact, out of 1,000 cosmetics brands in the U.S., we're the only one to actually drive market share up for 26 consecutive quarters. So we just stay focused on our core numbers. Certainly, I think investors would love to have seen us put guidance out there, but the reality is tariffs have not been resolved. So until we get resolution, we decided not to provide guidance and continue to execute, continue to grow market share, and continue to pursue the white space we have.
Now, how do people feel so far about the fact that you did have to increase prices roughly by $1, which is, you know, it's a price-sensitive market. Yours is well below everybody else, but that's still $1 means a lot these days.
You know, we take our responsibility of delivering superior value very seriously. So in our 21-year history as a company, we've only taken price increases 3 times. We did announce to our community a few months ago that we're going to be taking our prices up $1 given the tariffs and other cost pressures. And, you know, we had about 98% positive sentiment from our consumers. This is why I buy E.L.F. They're transparent. They care about value. Even after the price increase, 75% of our portfolio is $10 or less, so still a phenomenal value.
All right, so let's pivot to something that's very exciting that I think people may misjudge. Wall Street may be misjudging, but not the younger people in my office. The Rhode acquisition is going to pay off big, I believe, with the Sephora edition. This is something that is going to make people forget about the dollar, forget about the guidance, and focus on a major sales opportunity. How big? How big?
Well, we couldn't be more excited to welcome Rhode to the E.L.F. Beauty family. We just closed the transaction 2 days ago, and we're so excited, and so is Sephora. Rhode's going to be entering all U.S. and Canadian Sephora doors in September, followed by the U.K. later this year, and we love expanding our partnership with Sephora. We're also introducing E.L.F. in 6 Gulf cooperation countries in this later this fall, as well as introducing our brand Natorium with Sephora in Australia. So we love that expansion of the partnership, and we couldn't be happier with Rhode. It's another like-minded disruptive brand as part of our portfolio, and we have big plans for it.
All right, excellent. Now, I do want to talk about the possibility that maybe something's too downscale. I don't know. I have a Dollar General right near me. I like to go there. People say, oh, Jim, I can't believe you go to Dollar General. I say, I go where it's very inexpensive. Why not? No one does bad saving. Dollar General, right venue for you?
You know, every retailer who cares about beauty is the right venue for us. In fact, I know very few brands that could launch in Dollar General and Sephora Mexico in the same quarter and have both of them be exceptional launches. And the reason why is we offer a win-win. As we've looked at the data in Dollar General, you know, our thesis was they serve the underserved. 80% of their stores are in rural areas with less than 20,000 people. And what we're seeing in the data is the people purchasing E.L.F. at Dollar General, 60% of them have never purchased cosmetics in Dollar General. And 53% of our purchasers are new to E.L.F. So it absolutely is a win-win, just like all of our other retail relationships. We tend to be the most productive brand a retailer will carry, highest dollar per linear foot, productivity, and it all is driven by our value proposition, powerhouse innovation, and disruptive marketing engine.
All right, so some companies are obviously switching their supply chain, trying to minimize their exposure to China. You have an unbelievably good relationship with China. I don't know whether it's worth risking, but have you thought about, I know some of your business is already out of China. Have you thought about moving more?
Well, we have been optimizing our supply chain. If you looked at us a few years ago, 100% of our production was in China. It's now about 75%, and we continue to diversify. But we're diversifying less to do with tariffs and more to do with meeting the strong global demand we have for our brands. International was the fastest growing part of our business this past quarter, or actually last few quarters. And so really to be able to meet that demand, we'll continue to diversify.
Well, last question is a kind of complex question, but why did the other guys still not see it coming? Why did Estee Lauder never cut price? They just felt like it didn't matter. I mean, did they realize that your stuff isn't that much different from theirs? I don't get it.
Well, we have very different models. We have a lot of respect for our competitors, but we are all about making the best of beauty accessible for every eye, lip, and face. And we're going to continue to follow that strategy because it's working.
And it just doesn't seem to dawn on people. I don't know how much their markup must be so much. It started. I think if people knew how outrageous it was, how little it cost them to make the stuff versus what they sell it as, they would just be even more drawn to your product.
Well, we've been picking up more consumers every single quarter. We're the #1 brand amongst Gen Z, the most purchased amongst Gen Alpha and millennials. And we're really picking up consumers in every age bracket. And it's through innovation, like we just launched this last quarter, this vitamin E, C, and ferulic serum. It's priced at $16, which is higher than normal E.L.F. products. But the only other thing like it in the marketplace is a prestige item at $185. Yeah. So we have an incredible value, and consumers understand that, and that's one of the reasons why we continue to pick up a lot of market share.
It's a big reason why I continue to recommend your stock, and I'm not changed yet. Tarang Amin, he's the chairman and CEO of E.L.F. Beauty. Tarang, I love you when you come on. You come on feisty. Thank you.
Thank you.
Absolutely. Mad Money's back after the break.
Coming up, Cramer takes your calls, and the sky's the limit. It's a fast-fire lightning round. Next. Tomorrow, kick off the trading day with Squawk on the Street. Live from Post 9 at the NYSE.
You don't pronounce yes. That's bro. You know, like, hey, bro?
I like bros.
Hey,
you're my bros.
Hey, bro, taser you know?
It all starts at 9 a.m. Eastern. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.